In just a couple of minutes, we're going to teach you how to save thousands of dollars over the lifetime of your mortgage. You see, your mortgage is based really on three core pillars: the down payment that you put down for your mortgage, the term of the mortgage that you select, and the rate that you are going to pay for the interest. And the rate that you pay for your mortgage is based on your credit score. Now, this information is from myfico.com, and this gives you an overall idea of how people in the marketplace are rated by this agency as far as their credit. And this is what the lender uses to determine your credit worthiness. And the higher your credit score, the lower you will pay in interest. And the lower your credit score, the higher you will pay in interest. So before getting your mortgage, it's important to understand that there are a couple of simple things that you can do to increase your credit score, and that could potentially save you thousands of dollars over the lifetime of your loan, because the higher your score, the lower your interest rate will be. So here's an example. And again, this is not saying that you're going to be able to get any of these rates or anything like that. This is just an example of how this works. So if we have a mortgage amount of $200,000, and that's amortized over 30 years, which means the mortgage lasts for 30 years. If you have a credit score of 760 and above, an average interest rate in that range might be about 3.582%, which means that your monthly payment is $907, and over the term of the loan, you pay $126,617 in interest to borrow that $200,000. Now, if you look at a credit score of 620 or below, you could potentially pay an interest rate of 5.171% or even more, and that would make your monthly payment $1,095, which means that the interest paid over the term of that loan is $194,071. So even taking a little bit of time before you get your mortgage to find out your credit score and make sure that it is as strong as possible can save you a lot of money and get you a much better deal. So here are some tips to help you make sure that you have the best credit possible while you're going for your loan. The first thing that you do is contact the professional who's running this video. Call them and get your credit score. It's free of charge and there's no obligation. Once you get that credit report, check for errors and fix any mistakes. Sometimes there are things reported on those bureaus that aren't entirely accurate. If you clean those up, there's the potential to raise your score. Then make sure you are paying all of your bills on time. I know life gets busy and sometimes things can slip through the cracks, but it's important that you make all of your payments on time. And then pay off all the debt that you can. If you have lump sums of money or you have a potential windfall coming in, use that to pay off your debt and keep the amount of debt that you have lower. But don't close out a credit card if you pay it off, because keeping that credit and having it long term could potentially help your credit score as well. So if you do those four things, that can potentially help increase your credit score. So go ahead and call the professional that's running this video today to get your score and a free mortgage rate quote so you can see whether now is the time to get into the marketplace, or if it might be worth it just to wait a little bit of time until you're ready to go. Hope this video helps and have a great day.